Rick Santelli here with the big breaking news of the morning, the big July jobs report. Non-farm payrolls up 73,000. Definitely a bit light, but maybe it's the Goldilocks. We'll have to see how the market moves. 73,000, that would be the lightest rate of the year. You have to go back to October of last year to find a lower non-farm pace at 44,000. Now, the revisions, here's a biggie. The 2-month revision, minus 258,000. That is a biggie, Average hourly earnings on month-to-month basis come in as expected, up 0.3. And if we look at year-over-year perspective, up 3.9. That's important. That's a tenth higher than expected, 0.2 higher than the 3.7 in the rearview mirror. And that 3.7 was the lowest year-over-year earnings rate going back to mid-21. If we look at the hours work at 34.3. That's up a tenth. That's a good thing. The unemployment rate moves up a tenth. It moves up a tenth from 4.1 to 4.2. And this makes it the fourth 4.2 read of the year. To find a higher reading, you're going way back. You're going all the way back to October of 21 when it was 4.5. Now, if we look at labor force participation, comes in a tenth light, 62.2. That's a tenth light in the rearview mirror and expectations. 62.2. To find a lower number, you're going back to the end of 22. And finally, the underemployment rate, which is called U6. That 4.2 is called U3. 7.9 on the underemployment rate. That would equal where we were in March. To find a higher one, you're going to February. What's the market doing? The market in interest rates is moving lower. Why is it moving lower? Because of the big revision would be my guess, and maybe partially due to the light non-farm, but it is the revision. We have moved down quite a bit. We're at 432 now. Pre-number, we were hovering around 439-ish. And if you look at where we settled last week in a 10, it was at 439. So we're now down about 7 basis points on the week. A 2-year last week closed at 393. It is now down 10 basis points, and that's after closing at the highest level yesterday in the short end since mid-June, of course, of this year. Pre-opening equities, they're moving a bit lower, but they haven't made new lows in the Dow futures yet, so we want to monitor that. Joe and the gang, back to you.
Yeah, thanks, Rick. I'm not on Truth Social, but I'm waiting. We're going to hear something about too late, are we not? It's imminent. But this gives everybody, something, though, Rick. It gives people that hate the tariffs are killing the economy. People that want interest rates to come down, see, I told you so. The labor market's weakening and there's no inflation. This is going to give everybody on both sides of all the issues just a bunch of stuff that they're going to point to as evidence. I'm waiting for Steve's take. He's working on it right now. He's typing.
I don't get all the minutia. I get to gloss over what just comes across the wires. But one thing I will throw out there, one of the key factors of this administration has been trying to pare down the size of government. So government hiring is included in this report. So to see non-farm payrolls lower, to see revisions, shouldn't be all that shocking, at least in terms of how much government roles have played in these numbers. Need to point that out. And in terms of the unemployment rate, 4.2, that's definitely an uptick, but still, historically speaking, well-behaved. Those are my 2 cents.